So Richard's question here is, being away from public housing is often a criteria used to find good locations. How statistically significant is the data going back 10, 20 years in terms of impact on growth? I've seen some research presented on YouTube showing it's not a major impact, contrary to popular belief. So I guess to Richard's question here, in terms of public housing for us is, one of the many ingredients that we go into, I guess, trying to find not only the right location, but then the right street and the right property within that location. So it's about looking at projects, it's about looking at employment, the lifestyle factors that happen within an area, the population growth that happen within an area, but also supply, because you can have all the population growth in the world, like Melbourne and Sydney have had crazy population growth over the last 2 decades, but they've also had crazy amounts of supply, particularly in the house and land package and the apartment side of things as well. Whereas you've got Hobart and Adelaide, respectively, they sit last and third last for population growth, but they've been the best two performers in terms of capital growth. So it's about mixturing all those things together. Then we've got the algorithm. So the algorithm is looking at 26 key data points, and there's lots of subsets of data points that feed into that. And each of those data points, think of it like a recipe. They've all got their different weighting score. It's not like all of those data points are a teaspoon each and we mix it all around. Some of them are a teaspoon, some of them are a tablespoon, some of them a cup. Public housing is one of those things that sit into that. But then on top of that layer, we've then got the checklist that we run through, right? So it's about making sure we're taking away risk factors, we're weighing in items that, potentially scare off potential home buyers or renters that impact our days on market. Because if those items are sitting on the property, or when it comes time to sell or rent a property, it's going to be harder to move that property on for a premium price. It's potentially going to be harder to get a tenant in there, so our vacancy rates blow out as well. So I've got the checklist. So I guess if you think of it kind of like the old Jenga blocks, my two boys love playing Jenga, though they're not very good at picking up the blocks. But we can pull out a few things, like in isolation. If we just look at interest rates impact on property growth over a period of time, we could mount a case that it really matters, or we could mount a case that it doesn't matter. But in isolation, when we look at just like at many data points along the journey to get to the location selection, but then public housing in isolation might not be a direct impact on capital growth, but it has other impacts, and particularly it's going to have a really big impact on your tenant quality. So, I've seen this firsthand in terms of some of my investments where I'm in a pocket where I'm in maybe well above the median house price. And in line with that, my rent is above the median price of the area, but the quality of tenants I'm tending to attract to my property are going to be much higher, tend to take care of your property better, tend to pay their rent on time or be ahead, stay longer because potentially they're there because that pocket of the suburb is zoned to a better school, their family's there, their work's there, whatever it might be. You will typically draw in better tenants. And from my experience dealing with hundreds of investors over the years, time is everything. So the number one reason why people get rid of their investment property, I would say from my experience, is negative experiences with an investment property. So if you've got an investment property and you've had crappy tenant after crappy tenant, or you've had maintenance item after maintenance item, but the minute that property turns a profit for you in terms of from a sale perspective, I've seen people just throw the property out of the door, even if it's made them hundreds of thousands of dollars, because emotionally it's caused them dissatisfaction or grief. They want to move that property on. Where the clients that I've dealt with, they've had a set and forget asset. They've never had a problem with tenants. They've been in good pockets. They're going to hold your property a lot longer. And then the longer you're holding your property, you're typically going to get better growth. But there's lots of little sub layers. So I guess to your question, Richard, in the last few years in particular, because investors have really been a lot more data available to investors, and they're kind of disregarding buying the right street, some of those public housing pockets have actually outperformed non-public housing pockets, but on the contrary, some haven't. So it's not really a big indicator. It's just one of many ingredients. But if we're looking at things kind of holistically, we want to make sure we're also attracting good quality tenants, good street appeal. Think of the other things that tie in with it. It's normally kind of tied to good access to proximity and utility, like home buyers or home owners are normally drawn to particular pockets for certain access to amenities and things of that nature as well. So they're the kind of there's not just the one ingredient, I guess I'm just trying to get at there. But thanks for flicking that question through, Richard.